Hey, are you tired of losing every time that you trade NFP, non-farm payrolls? Are you actually looking to understand what exactly it does? Well, this is the video you're waiting for. Hey, my name is Jose Ricardo Tejada. I'm editor of the Prosperity Digest newsletter and product specialist at Market Stars Daily. Today is the first Friday of every month, and if nothing goes wrong, meaning there's no U.S. government shutdown, we get NFP, one of the most important pieces of information in the markets. What it does, and we're going to take approach based on forex currency trading. We want to take a look exactly what's going to be the direction of the markets going into June, and the most important, what is the feeling for the market to actually stay long the US dollar index. Now, I'm not going to talk about the US dollar index during this video. I'm just going to remember you that the importance of paying attention to it. But what I wanted to do is to translate that into dollars, how that will look if you have dollars, euros, pounds, money to risk, how exactly that looks and how you have to position yourself, not in the short term, but in the medium long term, and most likely entire summer 2019. Again, just as a disclaimer, remember that all the video content is for educational purposes only. I'm not inviting you to buy or sell any currency here. I'm just suggesting you that if you take this information, the risk is on you. Investing and trading is risky ventures, so make sure you do that with capital that you can afford to lose. Keep in mind that past performance does not indicate future performance, and it's time. Let's go to the charts. We're going to start right away, and one thing I want to share also, it's my go-to-go guy. This is the guy I go all the time that I want to know exactly. This is my account in Spanish. And this is the guy that I want to go to get the information as far as the figures. Anthony Barton, the Twitter, A. Barton Macro. He's a guy working for MNI News. And this is the dealer desk. As far as the dealer median, 175. You see all the guys. And my favorite here were the Morgan Stanley. Whatever they're saying, I will just do the opposite. I'm joking. Okay, so let's pay attention to that. So it's 175. I don't really want to take a look at anything else because we have some data yesterday that sort of leads the way and makes me think that we should bet properly against the dollar. Now, we will need a figure that comes consensus, same like this, or even double this to really think that the dollar has another chance. And that, of course, will put some pressure on the US pairs. But nevertheless, the price action and what happened yesterday with the European Central Bank, Mario Draghi, was not dovish enough, apparently. So if that happens, if he couldn't push down the euro, this might be our time based on fundamentals and the way the price is behaving, that it's time to go against the dollar. So we're going to take a look at that. About the minute, around this time over here to the right, you have the section, the follow-up. This will be the follow-up video for my Hawkeye Trader video to short the US dollar versus Canadian dollar. We'll talk about that during this video as well, because I think it's important to know where the market is. And we use Hawkeye Traders, leading indicators, trend and stops, the heat map. Also, we had volume pack. There's the fat boy, the fat kid, and all the different indicators. But what we used on that video almost a week and a half ago is trend stop, where the stops were located. So we know that there is potential. The US dollar index has been going down, lowering, trading lower from all the way from 98.20, 98, sort of like a triple top. So now what I want to take a look is, I have the information from Anthony, and I want to take a look at, I will start with the dollar Canadian. And remember, on that video, it's right here, it was a minute to, once again, I will put it right here. It's understanding where the stops were located. So on that video, I talked about having the stops around 136.22. We started trading short from 135.45. Then the market went back up again, 135.60, and crashed down. First level stops were located, thanks to Hawkeye Traders, we knew around 136.22.40, and the next level 137.48. Now, the funny thing is that once the market was trading above 135, that was your opportunity to short, because you have only about 100 pips. Now, if you think when the market moved to 130, let me just use some notes. Just have to write it down so you can see and have an idea. I just had a tweet. So the market, when the high was 135.60, and stops, according to Hawkeye Traders, Len Pro stops were at 136.22.44. So my point here is that at that time when he hit this, you probably only have 80 pips of risk. Now, I've seen other professional traders coming out with their ideas now to short the market with short videos. I explained these all over. I mean, I went over explaining step by step how you have to look at it. This video, you will have it in that section right there, the cards that you can allow to have on YouTube. But my point is this: we knew we had this information. We knew that our risk at that time was only 80 pips to play the short. Our upside was limited by unknowing the level where the stops were located. So now our risk is higher. So what I want to do, I want to go to my MT4. Have a bunch of trades on the pound dollar that I'm not really proud of. I moved too fast to trade those. So what I want to do is this. I'm on the monthly chart now on the MT4. Again, this is just a trading model. I will show you also, the link will be here to follow up with a third video so you know exactly how to play this. And we started this with a 5,000 hypothetical idea, just to give you an idea what you can do with this information from Hawkeye Traders. Now, you take this, the market is rejecting 135.60. Look how heavy this one looks. So I wouldn't be surprised if we complete another bearish candle like this one, and it will imply that we still have on the table another 390 pips. So if by any chance NFP, non-farm payroll, disappoints or is just not too far from consensus, that will be something that will not impress. It will not be the end of the day. What sure will realize a repricing and repositioning on US dollar longs, and that will give us the opportunity to actually think about this. It will actually give us the opportunity to squeeze this short. And oil is trading at not too far from the bottom here, so this is something also we have to consider. Brent yesterday went up almost $1.90, so that's something to tell you that the Saudis, a couple headlines on Twitter, I think it was Putin mentioned that the Saudis, they want oil higher. Of course they want oil higher, so this is something to consider at this time. Dollar index going down, WTI, Brent probably going up. There is, again, the odds are moving our favor to continue this bearish trend in the US dollar, Canadian dollar, USD, CAD. I'm looking at the monthly chart. Notice that I always start all my videos with a monthly chart. I'm not here to pick 20 pips a day. I'm looking for something that is suitable for teachers, architects, doctors, engineers, restaurateurs, sommelier, anyone that is a professional that is looking to add capital to play with savings. Let's face it, there's more than $11 trillion of negative bonds out there in the markets. You have to pay companies and governments to buy their debt. How ridiculous is that? So you have to think about this. So you need to go, this is the opportunity to go and really squeeze higher returns for your money. Now, we have this information, as I said. What I want to do then is, if this is a probability, and remember, gravity, you cannot see, you cannot feel, you cannot touch it, but it's real. If gravity continues to apply into this candle, we will have another 390 pips opportunity. So I already have a little bit of a disaster here, and I'm going to take two standard lots. I'm gonna always take my notes, very important. It's a good habit. Always take your notes in any business. Take your notes. The high 133.67, that's the high of the day. I know my previous high, it was 135.60. I will play with 135.10. So now let me just take this one out. And I'm playing with 157 pip risk. And I mentioned we have 390 pips to the downside. So we'll go, there you go. So to make it 2-to-1. And these will yield, if it happens, if the past repeat, not the past performance, the memory that the market has. So if that repeats, we are in line to make this much. See how this may repeat. We're actually in a rotation channel, what I call price rotation. It has to do a lot with the point of control that you can find in trading view. And if you can see, there's a price rotation. So prices, once they are in this channel, they tend to rotate all the way down. I mean, you can go sideways a little bit, But as you can see, since May 2015, this is how the price behaved. Everything above the 135 level is the excess of the price. And as we have, and I mentioned one more time, WTI all beat up at these lows. And also we have information from Hawkeye Traders. I want to take a look at this option, the 132.93. As soon as this stops, take a look here. The stops here, Hawkeye Traders trend plus stop indicator. We have a massive line of stops allocated on 132.95. Once these are out, it's game on. So this is what I'm looking. And also please notice on the volume pack, we're looking here for professional selling and buying. And you can see all the buying. Suddenly, this is stopping. This is indication that there's something about to happen. Either it's going to be a spectacular collapse of the US dollar against the Canadian dollar, or it's just again ready to hit the new highs. I'm going to settle and go for the short position. And this is what I want to go. I want to, as I mentioned, I set my trade to two standard lots going short at 133.53, and like I said, we're going to have a third video after NFP later during the day to see what happened, how these went down, how the information has been digested by the markets. Okay, the other thing before I move to the euro dollar and a couple ideas here, I want to show you what I learned from the team from Sala para Trader in Spain. This is the trend Fibonacci, and what that does, if this is for now the bottom, and in fact there's always volatility, seconds and 1-2 hours after NFP is released, then I can see how this can move at probably another 50 pips, so I wouldn't want to be surprised if it actually goes to retest 134. Now, the funny thing I want to mention to you, I'm in the daily chart, is the fact that the 50 exponential moving average is at 134.16, but moreover, the 38.2% of Fibonacci is right here. So this is something I want to pay attention to. So also what I will do, and as a good practice, I want to, and I will have an advantage from my previous position, I'm going to go with a pending order. I want to go sell limit. I will say 45 pips, so probably I'll go 135.90 if it spikes that high, and that will be even more convenient for my short idea. I'm just going to go with, and after that I will probably just want to pick 100 pips, so that's 33.90, 33, I will go 132.90 on that particular trade. For a short-term profit, that's one position. So if the market moves about to the 133.90, I will sell the market, go in, I will put my stops only 60 pips from that entry, so that will put me at 134. This is the price to go in, and the stop 134.50, I think. Yeah, so 40.60. I just put it at 134, yeah, 134.50. That's where I will like to be. We'll modify that order. Now, the other thing, so this is the continuation, and you will show you before I finish the video what happened after the first video. Once again, here's the video, 180 views, couple viewers like it, but I'd like you to pay attention to it and see what we did here as far as how this was all the way back on May 26, how I indicated that technical levels for a potential short trade based on Hawkeye Traders, and you can take home $4,000. And I will show you hypothetically how exactly that happened and what we did, what I did there. Now, to finish this video, I want to take a look at the euro. The euro is, again, I'm on the monthly chart, trading view. I'm using the package volume pack from Hawkeye Traders. I have my volume pack, I have my heat map, and I have my trend plus stops indicator. Now, to the upside, where are the stops? 114.24. Again, I repeat, to the upside, 114.24. Write that number, it's very important. To the downside, first level, I have something happening at 110.60, and then I have something at 109.41. But before we get there, again, if yesterday we have the situation, we have the scenario from the European Central Bank, Mario Draghi couldn't drop more, couldn't help the euro to go down more, then this is where I'm playing the market. I'm playing to the upside. 113.66. If we take out this level, 113.60, then we are heading to 114.89. And the fundamental view is, right now the euro is one of the most hated, shorted currencies out there. Not even the pound has so much heat on it. So this is the game. Now, the rejection yesterday that it crashed all the way down to 112, it was actually 111.88, and went back immediately. That tells you that there's something happening. I don't think that they're popping up. The market is it's drying up liquidity of shorts to make a final push. And remember, I'm not going to show it now, but pay attention to the dollar index, DXY. It's available here. Also, TradingView, any package that you have with any broker. In this case, I'm using FX Pro. I'm soon going to start using Tickmill. Doesn't matter. Saxo Bank. They all offer AvaTrade. They all offer dollar index. Pay attention. If you're not going to trade it directly, if you're not going to trade the CFD directly, do pay attention at least what is happening there. Now, what I want to go is to pay to the following idea. As long as this support is in place. So if today, listen, if today, again, if today we do not close south 11.10, the euro is super bullish into summer 2019. That's what's going to take place. So what I want to do is this. I want to play that position as well, but I'm running out of margin. So it's a tricky one. How do I do that? Tricky situation. Let me take a euro chart. We know where it is, and now also I'm going to apply trend Fibonacci from this level. This is one. I can actually take it from this level. So I want to buy all these as a buy all the way to 1160, because it can trade below the 61.8% Fibonacci, trade here, and boom, go all the way up. Right now, the activated Fibonacci, if I were to look what is going to happen, this is the extension of the Fibonacci. It went here, see the support between the 50 exponential moving average, 112.22, went down, didn't close, open here, went down, went up, all this crazy volatility, and it continue. So at least at this section, I'm looking to go all the way to 114. This is on the daily chart, but it can still move down, play, and push higher. So we can have this, just going to repeat this scenario, can have this, and then why not come all the way down and go, it goes all the way up. This is based on trend Fibonacci, and also because we have the information from Hawkeye traders where the stop losses, their trend and stops are allocated. Important to pay attention. So what I will do is this. Because I'm already over leveraged, and you don't have to do this. This is because I play the market in a very bold and aggressive. It has its perks. It also had its risk. Remember, everything you do, measure your risk. I'm not a financial advisor. MarketSearch Data is not liable for whatever you do with your account. But we want to actually give you some ideas and some kind of arguments, valid arguments to play the market. But we want to also show you how you do that financially. We want to put dollar amounts into these ideas. Now, what I want to do is this. I'm going to just go and add one lot. Just want to go in now. And I'm going to play the market with a simple position. I want to play the market as long as it goes all the way down here. I'm risking $990, and I already know that somewhere around $400 at 114.14, that's where I want to get out of the market. So I'm looking to risk $990 to make 1,400. Not the best risk reward, but still nevertheless something that it's interesting. If the market actually pulls back another 50 pips, 30 pips, I will be looking to buy again the euro. I will do that during the release of the data, so I will pay attention to that, and I will put some notes on my Twitter and also MarketSearch Daily Twitter. Now, this is what I'm looking to play. We have information. This is where we have here is the first level, 113.69. Wouldn't be surprised if this actually can go as high as 100 pips. During today's session, and we'll be targeting finally 114.92 in the next 2 weeks. So this is what I have to you. This is what how I want to play NFP, non-farm payroll. We're in June, summer started. I want to make sure that you guys have the best information, technical information. Also, we have fundamental views. What is happening with the euro? What is happening with the dollar Canadian? Where is WTI oil? It's trading right now. Once again, it's trading around 53.50. popping up from the bottoms, and also Brent is doing acceptable. Brent's moving actually almost $2 from the last 2 sessions. So this is where we looked at. Always keep in mind, this is the image I want to give you about to activate the Fibonacci. Remember, it's a buy as long as we can buy all the way to 111.50, and if we don't break the lows today for the euro, 11.10, it's buy all the way into summer for the euro dollar. Pay attention to what happened. Here are the last views, a weekly chart for the euro dollar, euro versus US dollar. Hawkeye traders, this is where we have the stops allocated, and one more view for the US dollar versus Canadian dollar. Very important. If we take out today the 132.90 level, it's game on, and we in fact will be in a bearish trend for this pair, US dollar versus Canadian dollar. That's all, guys. Please make sure to the red button, please subscribe to this channel, share your views, make comments, let us know what you think. I record these videos for you guys, okay? And please expect part 3 later tonight, what happened with these ideas. And of course, here is what is happening since the beginning, hypothetically, the way we trade, and with the information, know that 135.60 was your high located at that moment, and the stop loss were located at 136.22, 136.40. Thanks to Hawkeye Traders. This is actually a name. I know it's a simulation. You don't have to tell me. Hawkeye Traders. This is how I'm going to label it. We have a couple trades in, and these are a bunch of trades. This is actually, you should be looking with a $5,000 investment over the last 2 weeks, week and a half, going short the US dollar versus the Canadian dollar. Here's the history of the trades. You can see the majority. Look at the US dollar Canadian. You can see we only traded in the direction of the idea we shared. All were US dollar, Canadian dollar shorts. We had a couple other ideas, silver, gold. You can see it went well. But the core of this simulation trading portfolio, currency trading portfolio, was to show you the entries based on only selling the dollar Canadian. We will actively trading in the direction of the trend. And if today, once again, before I let you go, if today we break to the downside 132.85, it's officially a bearish trend in the pair US dollar versus the Canadian dollar. Thank you for watching, and again, subscribe, and I see you on the next video on part 3.